Hello guys and welcome back to our YouTube channel.
In this video, we're going to be talking about some market structure on a few NZD pairs, talking about the phases of the market and how you can use that to determine the overall direction of the market.
But before we get into that, make sure you like, comment and subscribe and turn on post notifications so you don't miss any content.
So let's get straight into it.
Starting off with NZDUSD, we're starting on a weekly chart, working our way down to the top-down analysis. Now, as you can see on the weekly chart, we have came to a strong area of resistance at 0.74. Now, this is a psychological level in the market, and as you see previously, we had multiple rejections from this level, and once a false breakout and coming straight back down. So, a strong level of sellers are stepping into the market at this level. Now, if we draw our attention to most recent price action, we can see that the weekly has left a big wick to the upside. Once again, trapping buyers thinking we're breaking this psychological level, heading to the upside, and all of a sudden the sellers step in again and leaving some sort of pin bar on the weekly. And ever since then, we had an impulsive move to the downside. So jumping on the smaller time frames, we can definitely see a shift in structure and potentially look for this sell position all the way back down. And you can also see that the daily, this weekly, we have a weekly trend here. It's broken it and also retested it, which is really nice. But on the smaller time frames, it becomes a lot more clearer. Jump on the daily. Yeah, so the daily looks a lot more clearer. We can see where price retested it here with 1-2 touch, and then we had that impulsive move to the downside. Now, just looking at this and looking at market structure, what can we see? We can potentially see a head and shoulders pattern forming out. Where this is our potential neckline across here. This is the left shoulder. This is the right shoulder, and obviously this is our head. And now, obviously, you can see the head pushed up to the upside, grabbing those people, getting into the market, and then coming straight back down. Made a lower high in the market, and then made a lower low. So we can start to see the shift in this bearish. Shift from bullish to bearish market structure, and this is a perfect example using head and shoulders pattern. So now what would we like to see happen next? Well, as you can see, we've had this strong impulsive move to the downside. So now what we like to see is some sort of corrective pullback back into this level. As you see, a nice level of support. Now we've broken it with this big impulsive candle. Now we're waiting for that correct structure back up. Now we need to add in some sort of confidences in order to take the trade. And for example, one confidence would be Fibonacci from swing high to swing low. As you can see, from swing high to swing low, we can start seeing potential rejection levels. Now, as you can see, 38.2 is looking like we're rejecting at the moment, but bear in mind, we still got this level that's been untouched that sellers would be definitely more intrigued to get into the market. So this might be catching some early sellers step into the market, and then we might see a dip back into the 50%, even potentially the 61, to then see that reversal in the market. We can also see how price is correcting. We have got this vague counter trend back up to this region. So we'd like to see that being followed to then see that spikes into these levels, to then see that reversal. Now the targets we'll be looking at potentially the 1.27 Fibonacci extension, or even a 1.67, depending on how strong this trend will be. So yeah, going into next week, we'll be looking for a dip back into these into this region to then look for that continuation to the downside, and boom, that should leave us nicely with NZDUSD.
Right, guys, so I'm going to be talking about EURNZD, really breaking down like the market structure and the phases that the market's in, to be able to kind of determine why the market structure has now shifted from bearish to bullish, and then basically just talk about combining some confluences with the higher time frames and Fibonacci, etc. So you can see with this market, we were clearly making bearish impulses followed by bullish corrections all the way down from up here, and then making again another bearish impulse followed by a bullish correction all the way down. That's what the market structure is looking like. If I drop down even to the 4-hour time frame, you can see on the lower time frames as well, we do have corrections as well. So we've got impulses and we've got corrections, but let's jump back up to the daily and see, well, what actually happened for the market structure to actually shift. You can see down here that we made this last impulsive move to the downside, and then instead of actually correcting back up, we actually impulse straight off this level. So if I jump up to the weekly, you'll be able to see why. So looking at this weekly time frame, you can see that price has actually reached this level in the market, this support level through here. whereas used it multiple times as support, where the market's then flipped from bearish market structure to bullish market structure. So that's what you can see happening. As soon as price touched this level, we saw this candle close as a pin bar, and the daily candle closes like quite an impulsive move, some strong daily candles off of this level. So let's jump back up to the 4-hour time frame. Maybe it's a bit bigger. So yeah, you can see the difference in market structure. Basically, we have this move here. Let me highlight it. We have this move, which is very impulsive. And then we have this move here, which is very corrective. And then again, we have a big, strong move to the downside, very impulsive. But instead of making this corrective structure, we actually impulse off it again. So rather than correct, we actually see buyers step into the market. Because basically what a corrective structure is basically the previous market, basically the people who are in the market previously, those people who are dominating are basically taking a rest. So as you can see, sellers are dominating this market and then they're taking a rest. And what that's doing is it's building liquidity for people to jump into the market later on. So sellers are jumping later. So impulse, correction, where sellers are taking a rest and then sellers jumping into the market again. Now, instead of sellers actually taking a resting period, we actually just see buyers jump into the market with a lot of force. It's purely because of the higher time frame on the weekly, where this level has been used previously as support. So buyers step into the market. And then what happens, rather than making a bullish correction, which we saw, we actually are seeing sellers take a rest. That's why we get this bearish correction. As you can see here, it's bullish, ready for sellers to re-enter the market. Now it's bearish, ready for buyers to step into the market, as you can clearly see. We can also join in some Fibonacci levels as well to see, well, where is the market actually pulling back to? We use some swing high to swing low. If I join that to there, you can see that we actually whipped pretty perfectly the golden zone of the Fibonacci of the 61.8. So we impulsed, buyers stepped into the market, we corrected, and then buyers stepped back into the market at the 61.8 Fibonacci. And then we saw, once again, another big impulsive move to the upside. So clearly now, this market structure is bullish and buyers are stepping into the market on a much longer, higher time frame perspective. Again, we have this impulsive move and then again we correct. So buyers are taking a rest again in the market and we're pulling back in this corrective phase. And this is where we're looking to kind of enter these longer term positions, is on the basically when this corrective structure is going to finish. And how we can kind of determine that again is we've got this level through the market of significance where it's being used as support and resistance. And also, once again, we can add our Fibonacci level from swing low to swing high. And you can see, once again, this market does use the 61.8 to perfection again. History has repeated itself. Buyers stepped into the market, correction back down to the 61.8 again, impulse to the upside, correction back down to the 61.8. So basically, it's just pure buying pressure in this market with a lot of confluences using significant levels and the golden zone of the Fibonacci. So how can we kind of use this now going into next week? Well, we can basically just say we're only looking for buys in such a market where there's so many confluences for buying positions. We don't really want to be fighting this. We don't want to be taking sell positions because the probability isn't in our favor to do so. So we've now broken this counter trend. We've seen this impulsive move to the upside. Again, if I drop down to the 1 hour, you'll be able to see the market structure and how we're basically just buyers are in control of the market. You can see we had this impulsive move and then even just a little smaller corrections, just a small resting period on the lower time frames for these buyers, almost like a flag pattern, pennant, impulse, correction, continuation. And again, what we're forming right now is just this resting period, this bigger resting period in the market, all of this market structure. So what we can predict, if I jump up to the 4 hour again, is for price to potentially continue correcting. But again, if we're looking for our entries, potentially we're looking for a dip back below this level to then look for some higher moves, whether up to this resistance level or even further. Looking at structure to the left, we can see there are high points coming up where we could potentially target. And it backs what Ryan was just talking about as well with NZDUSD, how we're looking for sells with NZDUSD. So with EURNZD, the fact that we're looking for buys, it does back this bias. So yeah, going into next week, we're basically looking for some kind of entry signal, which we have, to dip back in below this level to then look for a continuation to the upside and just continue with the overall trend. So yeah, that's basically a breakdown on Euro NZD going into next week.
Thanks guys for watching the YouTube video. We really appreciate all the support.
If you want some help and guidance along your forex journey, all the links in the description below can take you to our premium group, or just give us a message on Instagram.
Until next time.